Hi, this is Bruce at Turnaround Stock Investing, a community of value investors devoted to helping you find, buy, and manage a portfolio of turnaround stocks. Today I wanted to do a book review on a book that you can see before you, The Art of Execution, How the World's Best Investors Get It Wrong and Still Make Millions. I especially agree with this little quote right here. I wish I had read it 30 years ago. I conclude, this is a sensational book. If you have watched my video, The Introduction to Turnaround Stock Investing, you'll notice that I'm a huge believer in the Pareto principle 20-80 investing for turnaround stocks, and that 20% of your investments will account for 80% of your gains. And as a result, cutting losses is extremely important to generating large returns. While I have seen this principle operate through my business career and through many other businessmen, I have never been able to point to a study that highlights this result as well. Well, that's until I read The Art of Execution. Let me give credit to the author, Lee Freeman Shore. I've never met him, and I believe he's a portfolio manager in England. I encourage you to buy the book, but for the purposes of this book review, I will take snippets to make key points. We're now looking at one section of the book in which he mentions that over a period of 7 years, from June 2006 to October 2013, he examined 1,866 investments, representing a total of 30,000 trades made by 45 of the world's top investors, all of whom he had the privilege of managing as part of his job as a fund manager at Old Mutual Global Investors. He then goes on to say that most of their investments lost money. Personally, he was shocked to discover that only 49%, 920 investments of the very best investment ideas made money. Even more shocking was that some of these legendary investors were only successful 30% of the time. He then goes to say, after studying forecasting day and night for over 30 years, I've yet to find anyone who could consistently and reliably forecast an uncertain future. That was a quote from Ned Davis. Despite some of them only making money on 1 out of every 3 investments, overall, almost all of them did not lose money. In fact, they still made a lot of it. He then goes on to say, this begs the question, how are they making lots of money if their ideas are wrong most of the time? How are most of these investment legends able to be wrong more often than they are right and still make incredible profits? What was the secret of their success if it wasn't down to an elusive Midas touch? This question burned the author. It led him to analyze every single trade that these investors had made over a 7-year period to try and uncover their secrets. He goes on to say success in investing is down to how great ideas are executed. Investing is all about execution, execution, execution. This lines up perfectly with the investing mantra of turnaround stock investing. We want investors to realize that it is okay to cut losses. The value investing mantra of buying more as share prices go down and down is just not the way to manage a portfolio. He goes on to say, you don't even have to worry about whether an investing idea works or not if you focus on how to invest in an idea. The reason for all the Wall Street success stories he knew boiled down to money management, money management, money management. And George Soros, a similar self-made billionaire trader, once stated that it's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. The next section of the book, I'm Losing, What Should I Do?, is very important, especially given today what's going on with value investors as value stocks continue to get hit day after day after day. So you're in a situation that investors have lost a lot of money and there's massive uncertainty and negativity surrounding your investments. In this scenario, you want to make sure that you don't make up stories to positively explain losing situations. You also want to make sure you don't adjust your mental story and time frame so that the stock always look attractive, and don't dismiss the evidence that you're getting. Another very important point that I make out in a number of podcasts and in my book that is attached to Turnaround Stock Investing that's available to you is that you don't want to dismiss earnings surprise, because earnings surprise typically follow earnings surprises. and no one likes to acknowledge that they are wrong, especially if the change requires a complete turnabout. This is a very important point to remember. This next statement in the book should bring some comfort to many value investors that are watching this. It's very easy to feel that as a value investor, you're a professional and that you should be right. But as he suggests, the fact is the greatest minds on the planet can be wrong. His findings suggest you should expect to be wrong at least half of the time. The very best investment minds are. And this is, again, the critical stance behind turnaround stock investing. You must develop the mental stamina to cut your losses and realize that 20% of your investments will generate 80% of your profits. Next, he states, always have a plan. Investing is all about probabilities. Whether you invest should depend on the odds and the edge you think you have. When faced with a painful loss-making position, most people do nothing. They turn into a rabbit and procrastinate, letting all their biases play havoc with their decision-making, hoping time will resolve their issues so they don't have to. The best way around this is to draw up a plan and precisely what actions you will take when your investments don't work. Right now, that is a critical stance that many value investors have to take as they are sitting in stocks that are going down and down and down. What is your plan? Next, he discusses what to do when you're at a loss. This is a very personal decision of how people will stop out of their positions and manage their portfolio. So you have to decide what's best for you. His solution is to sell out or significantly increase his stake. He suggests if I had a blank piece of paper and were looking to invest today, would I buy into that stock given what I know now? Regardless of what he says and what I say, you must have a plan to control the losses in your portfolio. Whether you cut your positions in half, sell out, you must have one. Remember, don't refuse to accept that you are wrong. That is a critical point. Another gem of the book is this paragraph discussing Ned Davis's book, Being Right or Making Money, in which he discusses how the bulk of investors' losses in bear markets come in the final third of the fall. I recently did a screencast on this topic, and I think everyone should watch it. It is a very important point to remember as a value investor. He goes on and says, this suggests that cutting your losses early is difficult, but makes a lot of sense. Not least because selling out of a stock helps clear your head and enables you to assess the situation more objectively. It's like taking a decongestion pill when suffering from a cold. The winners make small mistakes, while the losers make big mistakes. This previous point is critically important because remember, it doesn't take much to permanently destroy wealth. Just being indulgent with one or two losing investments can really hurt. And I'm sure that many of you listening to this screencast will acknowledge this. These are just a few highlights from this wonderful book. I suggest everyone buy it, study it. And after doing it, I strongly suggest that you become a member of Turnaround Stock Investing. Because while it is easy to talk about stop losses and even starting a plan for cutting your losses, it is extremely difficult to mentally do this in the heat of the moment. As a value investor, on this date, January 13, 2016, I am sure many of you are sitting in losses or have to contemplate cutting your losses, and that is causing a lot of mental stress. Being part of Turnaround Stock Investing can help you deal with these anxieties and easier to create and stick with a plan. So with that, have a good day and look forward to seeing you again.